Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon is Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq 100 performance and if the options market was signaling the pullback we've seen over the past few trading sessions. And Shawn, it certainly has been a reversal for what we saw in August.
Yeah, and I don't think very many traders were completely caught off guard. Maybe the pullback was a little bit stronger and more pronounced than many were expecting. But the options market, it was noted pretty much across the financial world, was sort of signaling some sort of a warning as we were getting new all-time highs, and we're actually starting to get some of those that strong performance achieved not just from the Nasdaq, some of the other indices as well. A lot of traders were noticing, though, that indicators of volatility, the implied volatility or forward-looking indicators, are actually moving higher alongside that. And so usually when you see both of those happening in tandem, it's one of those has to give at some point. Either implied volatility or vol needs to come in a little bit, or those indices actually do start becoming a little bit more volatile, and you typically do see a pullback. And that's really what we saw. If you look into the past couple of weeks or so, you saw these new all-time highs getting hit from the Nasdaq, but you also saw that implied volatility moving a little bit higher. So that sort of is now played out. We've gotten the pullback, and just looking and asking yourselves, well, where do we think we might settle in and maybe get some support? It looks like right now, and I just looked at some of the major components, some of the large market cap names, the names that everyone's familiar with, Amazon, Microsoft, Apple. They all seemed they all actually showed the same sort of indicator on their charts as well. Their own implied volatilities were actually moving higher as they were also hitting some pretty incredible levels. Now we're seeing them pull back, and you are seeing some old technical levels start to hold. So I think that's one thing to keep an eye out for, and see if maybe we can at least establish a base here, and maybe get a little bit more buying coming back in. But also you saw the implied volatilities actually start coming down with some of these names as well. I think it's interesting to see that, because I think that does also indicate that if you can get some of these larger names that have a larger weighting in a lot of these indices start to get a little bit of a bid here, that can also just stabilize the overall indices themselves. So something to keep an eye on. I would note that Apple has not seen quite the pullback in its implied volatility that we've seen, say, out of something like Amazon, and that is because they do have the 5G phone reveal coming up, expected to be next week. I think that's going to be a big day for Apple. Some are saying it's the biggest product release they've had in a decade, and certainly 5G is sort of the next frontier for a lot of these companies. So will certainly be interesting to watch, but I do think that might be holding some of that implied volatility up for names like Apple, and you're not seeing it come off as much as you are seeing it in other names.
Right, Shawn, it's a great point that you make, that the concentration of 8 to 10 names that make up the index, so goes the market. It's a great point that you've made, and I think that's kind of the concern all throughout the summer when we saw such extreme moves. But I think the story of 2020 is, and JJ and I had this conversation this morning, in fact, that these 3 to 5% moves, whether it's to the up or downside, it's still quite concerning regardless of what direction it takes. And I think that's what caught traders off guard a bit as well. It's like, when this happened in March, we knew that there was something discernible there, that the economy was locking down as a result of COVID-19. This just kind of happened towards the end of last week out of nowhere.
It did, and I think that was when you get a run that far that fast, it makes it difficult to sort of establish new levels. And so when you start new levels that maybe could act as support, so what you did see is as you started to see selling coming in, I don't think anyone really saw any interesting technical levels that they wanted to come in and maybe start maybe buying some shares up. So I think that's why, and I also think there was some profit taking there. You've been in these names this year. You've had an incredible run. And when you're starting to think of just all the potential volatility events that could be coming up here the next month, whether it be really the election, the feared, next spike or second wave with COVID, some uncertainty starting to creep in around some of the vaccinations and treatments. When you start to put all that together, I think it makes sense if you're someone sitting on some pretty nice gains in a lot of these equity names, that you are at least just taking some off the table and waiting to see how things develop. And there could also just be some rebalancing. We're getting ready to start going into the end of the quarter. Rebalancing doesn't happen overnight. It's usually a process. And if you have been just sitting, say, in a diversified portfolio, you actually probably have an incredible weighting to tech just based off of the outperformance of some of those tech names. So you might even be seeing some portfolio managers, some investors just sort of rebalance before we kick off the fourth quarter.
All right, Shawn, thanks for joining us as always.
Yep.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.